Every day you turn on the news, you look online, there's something new about crypto or digital assets. While the terms are interchangeable, I prefer digital assets because it refers to the entirety of this new ecosystem that is being built in front of all of our eyes, one block at a time. In this video, I'll explain why you should care about digital assets as the next pillar of innovation, just like the internet during Y2K. I'm Corey, and on this channel, I help you decode technology and innovation to grow your wealth on the journey to financial independence. In this video, let's walk through why digital assets matter and why I think the world is now starting to wake up to this fact. Some quick context to set up the discussion here. Today, the world has about 7.9 billion people. Based on the latest data available, as of the beginning of this year, almost 60% of the global population, which is about 4.6 billion people, has some level of internet access. Even more interesting, 92.6% of people that use the internet today only use a mobile device to get online. That's 4.3 billion people that only use their cell phone to get on the internet. As I land the plane here, let's take a quick look at some tokens and use on-chain data. If we compare the internet, the number of people on Earth with a cell phone, and we think about the growth of the internet since its inception up until today, it's pretty clear to draw an analogy between the adoption of the internet, the use of cell phones, and digital assets and their future adoption. So let's take a look, for example, at a few tokens and some on-chain data to see why I think we're witnessing the rise and adoption of digital assets. First, on-chain data refers to the blockchain itself. Each specific type of protocol has their own blockchain. So to name the few, you have a Bitcoin and Bitcoin blockchain, Ethereum, the Ethereum blockchain, you have Litecoin, Litecoin blockchain, etc. and so on. For digital assets, the cool thing is that you can actually see and measure what buyers and sellers are doing in real time. For this example, I've pulled data to show the active wallet addresses for a number of popular projects. The reason this matters is it's a verifiable way to see what people are doing and use network adoption as a metric to gauge the promising nature of specific projects. Let's look at some Glassnode data which tracks and shows what people are actually doing with the blockchain. Let's take Bitcoin first. As of now, there are about 16.4 million active addresses. The orange line is the simple moving average since 2012, and you can see on the left side of the chart, the y-axis, that Bitcoin has gone from below 2 million active addresses, these are the active blockchain wallets that people use, to about 16.4 million addresses today. You can also see that the price of Bitcoin is now north of 60K or hovering in that range. So next, let's take a look at Ethereum, another one of the major projects that many people have heard of. Ethereum today has about 6.7 million active addresses. Again, these active addresses refer to the wallet addresses of different participants on the blockchain for Ethereum. The blue line shows the active addresses since the project was launched, and you can see that the active addresses for Ethereum are trailing the Bitcoin active addresses, but ETH is at around the same level of active addresses today as Bitcoin was back in 2017. So as another example, you could take a look at Litecoin. Litecoin has about 5.8 million active addresses. While Litecoin has a lower level of adoption, you can see that the number of active addresses went vertical in 2021. Now we can't explain just by looking at a chart exactly what this means or what caused it, but you can see that there are more active addresses on the network and the other networks as Ethereum and Bitcoin since their inception, and this allows you to generally look at the trend of growth. Of course, there are other projects out there, millions of them. There are other teams that I think are promising. This is just to highlight an example of how you can use the blockchain data to show the trajectory of where things are going, and that's the whole point. It's not about a specific project, it's about where the world is going. So actually, if we look at USDC, which is the stable coin for the US dollar, and I've discussed this in prior videos, I'll link below in the show notes, but a stable coin is basically designed to reflect stable value, as it would say, of $1 to 1 USDC. Now we can see here that the active addresses are 522,000 active addresses, and the same thing you can see for Ethereum, for Bitcoin, and for Litecoin you can see in this project. USDC actually only launched in 2019, and its adoption has moved up drastically. What about other projects? I haven't gone through every single project out there, but I'll name quite a few that are actually really popular today. There's Cardano, there's Solana, there's Polkadot, the Kusama network, that whole ecosystem, which I've also done other videos on. All of these projects are showing high levels of growth in network adoption. And I just wanted to highlight here a few major projects and a stablecoin as an example to quickly illustrate how you can see the direction of travel of the industry, regardless of whether or not you believe in a specific project or you just think the industry is not long lasting. I think it's pretty clear at this point that from a technological development standpoint, blockchain and crypto companies and these specific projects are here to stay, and they actually just represent our current versions of Microsoft, Apple, Google, Netflix, etc. These are just new versions of technologies. These simple charts are all saying the same thing. We're still early in a very fast moving sea of change, but the genie of digital assets is out of the bottle. This means that regardless of how much some people want things to stay as they are or go back to how they used to be, that's just impossible. This change is coming and it's moving at an increasingly quickening pace. Regardless of whether you think digital assets are a bubble or not, just like people said the internet was back in 1999, they were half right. When people say there's a bubble, they usually mean value or prices relative to some objective measure is beyond what would be considered reasonable. My core argument here is not that it's right one way or the other. Prices may actually be out of control. It can also be true that the technology is revolutionary and everything you know will eventually move into this universe over the medium to long term. And that's the core point. Whether or not you agree on the current price of a particular token or project, that doesn't mean that the direction of travel is not up and to the right from the standpoint of adoption. Exhibit A is the internet itself. Every argument we hear today regarding digital assets such as Bitcoin or Ethereum or NFTs had some version of the same arguments being made against the internet or businesses built on the internet back in its early days. And just like then, the arguments may have been valid for a snapshot in time, but wrong over the actual long term. The logical deduction here is that over the long term, the digital asset ecosystem is going to be the place to be for every single business, entrepreneur, or globally ambitious person. However, since nothing is 100% set in stone, we all have to be open to being wrong and course correcting our positions. Maybe I'm wrong. Maybe all this data, all this enthusiasm, all the minds of young people around the world working in this space, maybe it will all amount to nothing. My personal opinion is that while that's possible, it is highly unlikely given the amount of capital, brain power, time, and sweat that's going into this space to actually turn it into something real over the medium to long term. And actually today, we're already starting to see that with things like the Lightning Network, which is revolutionizing the payment space. Regardless of your opinion over a week, month, or quarter, the direction of digital assets and Web 3.0 may not be what you think it should be. However, if we look at the younger generations and future generations, they're actually speaking with their time, attention, and money. And my point here is that we should all be paying attention to what they're actually saying. Let me know in the comments below what you think about digital assets and where they may fit in your investment portfolio. Are you all in? Or are you still not convinced? Join me on the path to decoding technology and innovation to grow your wealth on the journey to financial independence. Don't forget to like, share, subscribe, and hit that notification bell. Until next time,